Welcome to Morningstar. Higher inflation has been pushing up food prices for all of us. Part of the reason is that food packaging companies are facing higher input costs. Does this mean for higher and more expensive costs for food in Asia? I'm joined by Jackie Zhang, equity analyst at Morningstar. Hi, Jackie.
Hi, Kate.
How do the quarterly results of food companies tell us about inflation? What lies ahead in 2022?
So inflation pressure was already mounting early last year when demand was recovering, but global supply chain continued to be disrupted by labor shortages and logistics disruptions. We have seen from recent earnings that many packaged food companies are dampened by rising raw material and fuel costs, and price adjustments of products were not able to cope with the pace with which costs are increasing. Investors remain concerned about inflationary pressure on input costs this year. First of all, Russia and Ukraine are essential exporters of agricultural commodities such as corn, wheat, barley, colza, and sunflower seeds. Disruption of exports and spring sowing season will likely continue to lift prices for these commodities in the short term. Moreover, Russia is a key exporter of chemical fertilizers globally, supplying to major agricultural exporting countries like Brazil. Therefore, decline in agricultural commodities supply could remain as a tail risk few quarters out. On the other hand, rising oil prices have driven up prices of other petrochem products like PET, as well as transportation and overhead costs for companies. In short, cost pressure faced by packaged food makers is quite immense this year.
Right, so all these cost pressure, food companies usually pass on to consumers. Do you think this will continue, and will food costs be higher for Asia?
So defending their margins is definitely a key focus of packaged food and beverage companies under the current environment. And direct price hikes is the most straightforward and effective means. We've seen price hikes in China since third quarter last year for various packaged food and beverage producers. And we think there are industry and company-specific factors that influence a firm's pricing power. For instance, the room of premiumization for the product category, competitive landscape of the industry, that is whether it is a consolidated market or fragmented market, and the company's market share in their respective sectors.
Other than inflation, what are the factors that you're closely monitoring for food companies under your coverage?
We are closely monitoring the company's ability to maneuver on product mix, as well as their ability to improve operational efficiencies and channel effectiveness. In our opinion, companies that possess more sources under the Morningstar equity research framework should better withstand volatile times like right now with their unique competitive advantage.
So which name under your coverage do you think is better positioned for the long term?
So our top pick in China consumer staples is Yili for a couple of reasons. First of all, cost curve for its major input, raw milk, has plateaued entering this year. Second, we think the dairy industry still possesses ample room for premiumization in China. As a market leader, Yili should stand to benefit from resilient consumer demand for quality dairy products. Moreover, the company has the best operational efficiencies among peers in terms of cash conversion cycle. And apart from liquid milk, Yili has demonstrated recent success in growing its milk powder business through channel transition and excellence in R&D. The milk powder business commands higher margin than liquid milk, so it will be constructive to the company's overall profitability in the medium term. The reported financials for the first 2 months this year show resilient growth on top line and profits. And our 5-year CAGR forecast for revenue and net profit are 14% and 17% respectively. The stock is currently trading at low 20s forward PE multiples, which we think is undervalued and deserves investors' attention.
Right. Thank you so much for your time, Jackie. For Morningstar, I'm Caitlin.